Good morning, everyone, and welcome to the PivotBoss Pre-Market Report for Friday, February 23rd, 2018. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Right now, the ES is holding basically at the center of the large impulse range. It's holding within a very narrow multiple-day range. Over the last several days here, you can see on a 5-day range basis, we have very narrow readings here compared to what they had been. That's clearly showing us a couple of things. Number one, it's clearly showing us that on the whole, we have this right here, that midpoint, and we're stuck right around that midpoint. And again, we've had a very clear impulse range to trade off of, but we need the edges to be in play. So right now, again, as I mentioned over the last week, the whole week, I said this isn't really good for swing trading right now. We have to be to an edge. We have to be somewhere where it's a little bit better odds for success. Right now, what this is good for is day trading. There's a lot of good intraday trades to trade off of. As a matter of fact, watching previous sessions lows, previous sessions highs, those types of things offer opportunities to look for rejections. But right now, as this thing continues to trade right here in this middle, and with this thing coiling up, you can see volatility oscillating higher, now coming back down. At some point here, you'll probably see it pick back up as we see the next major move. Now, I've mentioned before that I think the overall swing is still to the upside for the most part in the short term, but again, we can continue to chop anywhere in this zone for much longer than you think we can until we see actual expansion. So again, got to be patient with the ES as it sits right at the center of the key range. All right, let's take a look at the NQ. Here's the NQ. If you look at the NQ, very similar trading behavior here where you have a very narrow range right in the middle. If we look at a 5-day range basis down here, there it is right there. Very narrow readings. Whenever you have that pink reading there, that tells you that it is smaller than average range. The current range is 65% or less of average range, and that tells you that you have significant compression going on, and at some point you'll see expansion out of that range. Compression doesn't give you any directional bias. It just tells you that the price range has compressed and now look for expansion, but the flow has been mostly to the upside. And I mentioned before, as long as we continue to hold that 66.53, there's a good shot we come up here and grab that 69.65 FOMC key level from January 31st. So still an upward bias overall, and again, got to look for this thing to continue to play out until proven otherwise. All right, now taking a look here at crude oil. Let's look at crude oil. There's crude. Basically, crude has given us a very nice impulse range as well. We have a great impulse move from here to here, down, back to the midpoint there, and that's given us a very clear area to do business. Again, very similar to the ES and NQ. We're kind of sitting around the midpoint of that area with an upward bias. I mentioned the previous session here that overall we've been trending up, and we have a good shot here to see an upward push into 63. 63 being the key level right here where the stops came out. We dropped down, we failed down here, and we finally made it all the way back to 63. This first green line, the second green line, this one right here is 75% ADR. This one is 100% ADR on a monthly basis. This was 62.99. We got the front end. And that 63.75 is a key level from a key range. And then that January 31st FOMC key level is 64.38. So there's still a couple of more upside levels that we could run into ahead, and given that price had a stop run day beyond that previous high, that's the key level right there for bulls to defend. We might get a move all the way back to that midpoint, which is just below the 62s there, but any pullback to that midpoint could offer a continuation toward those upper targets. So again, upward bias here in crude oil. Now let's take a look here at gold futures. Here's gold. Now gold's had a nice wide trading range that's been in play. This range spans from that 1365 to 1309. We've been trading in this range, and recently we've been on the swing down. I mentioned before that we were likely headed to this 1317, And we got very close here. We got to 1323 and then stopped and are now holding inside a narrow 3-day range. That narrow 3-day range right there could lead to some interesting behavior, but in terms of a breakout. But if price pushes up here and fails to get above 1340, that could offer another ride down to 1317. Again, this market right now is mostly trading within that key range, and overall we could be looking at further trading behavior within this price distribution before we see expansion. And right now the flow is to the downside, so again, looking for some of these lower targets to be reached. But it gets much more difficult when you're sitting right at the middle of that range. So be cautious in gold, but we do have a downward bias within that price distribution. Now lastly, looking at XBT, Bitcoin futures. You can see right here, that's all the price action that we have. Very clear key range, a nice bounce off the 50% back to the edge and bouncing down off of that edge. Now what I talked about before was a lot of folks are going to start looking at this head and shoulder type of pattern right here, and it's building out right now. So you have this price distribution that breaks down, holds in here, then breaks back up in the price distribution, retrades below it, and then you start to see a little bit more development. Again, that 1200 or 12,000 is going to be very important, because if it breaks through that level, you start to target 1590 to 16,580. It's a big time upside target. But if there's any failure to hold that 9K right there, then we start to make another round of weakness back down. So again, we're back into the spot where we were before, where price was trading in this narrow range. But right now it's more like 9K to 12K as this thing could develop, and then we could see more action. So right now the flow has been to the upside, but we're now in a zone where we could see a little sideways to up, and then it's all about the edges to see if we get expansion one way or another. But right now everything's kind of quietly flowing up. As long as 9K remains intact, we could have another retest coming at 12K very, very soon. Alright, that's it for now. Let's see how this plays out heading into the rest of the session. Good luck and trade well.